Let's start recording this. And so I guess, since there's only three of us here, I guess I would like to just start by saying, since you're here, and before I try to launch in any sort of explanation of topics, is there any sort of specific questions that you might have that I can help you with, or concepts that are really getting you right now? Hey Noah, welcome. I just asked the question if anybody had specific questions, and since we have such a small group, we can maybe try to address some specific things. That way, I don't have to give you a long spiel about stuff you already understand.
So is this the is this the accounting 101 Zoom class?
Uh-huh.
Okay, so we meet at 8. Okay, that's what I was just confused about. Yeah, that's fine.
Well, so it's 7 o'clock Idaho time, right? So Brianna, any questions that you had?
Not some specific ones. I was just the number 5 homework, the lesson 5 homework just kind of confused me. I did number 6 and that one was not confusing, but I guess just like anything on number 5, that one just kind of tripped me up a little bit. So just, the whole adjusting and trial balances and stuff, a couple of the certain things just confused me a little bit.
Okay. Yeah, I mean, I don't mind walking through like an entire homework problem or something if you think it would be helpful. Sometimes that's more helpful than lecturing about a concept. And so you felt like chapter 6, well, I hate that they have this broken down into lessons whose numbers don't match the chapters. That confuses me a bit. So lesson 6, which covered like chapter 4, right? Like the closing entries and stuff like that. Everybody felt comfortable with that concept?
Yeah, lesson 6, I did that this morning and it wasn't very hard to me. It was just lesson 5. I think just like the first problem is like, because everything kind of the next 2 problems depend on your answers for the first one. And so the first one, just a couple of the different like entries I had to put in, I was just confused about.
Sure. Okay. Yeah. Well, we'll take a look at it. So I'll just say like adjusting entries are hard. It's like one of the hardest chapters for everybody, always, every semester I've ever taught a financial accounting course. And I actually put together a few videos that are out there on the the additional study resources thing that might be helpful too, but definitely we'll go through that. So I'm going to go find that. Let's see, give me just a second. So we're talking about lesson 5. And then the chapter of the lesson 5 homework. And you said number 1. Share my screen with you here. So this one, does this look like the right one? I just want to make sure I'm in the right place.
One sec. I'm going to go look at this question if I think it was the right one.
Okay. It probably is. This looks like.
Yeah, that's the same homework, but on mine, that's question number 5.
Oh yeah, for some reason, whoever did this, and I'm gonna maybe bring this up, is they put it so that like that they scramble, and they usually do that with quizzes, like helps like so people don't cheat or whatever. But like this makes it super hard when a student's asking me for help, and I'm going like, what I think I'm helping them with is something different. So let's see.
Yeah, I think it was that previous one right before this one. When it talks about the Wells Technical Institute. Yeah, this one.
Okay. So WTI, Wells Technical Institute. So yeah, so what this has is a bunch of adjusting entries. And so, like in general terms, let me go back to chapter 3, adjusting entries, and maybe do a brief little primer on adjusting entries. Do you think that would be helpful?
Yeah, that would be good.
Okay. So the whole reason, I guess I could start with that. The whole reason that we have adjusting entries is because we have transactions where we pay expenses, but we don't always pay them in cash, or we receive money, but we haven't actually earned it yet. So we have all of these situations where the revenues and expenses don't match up with the payments in cash. And so we have to make adjustments for this fact, okay? So the type of accounting that we're doing is called accrual-based accounting. And what accrual-based accounting means is rather than recording revenue when someone gives us cash, we're going to not record revenue until we have earned the revenue. And we earn revenue by doing services or by selling goods. Likewise, we're going to have expenses, and we're not necessarily going to record the expense when we pay it, but instead we're going to record the expense when we incur it. And so we incur expenses when we receive the benefit of the expense. So if it's if we go to the store and we buy some goods, well, when we buy those, we're getting the benefit, or we're getting the goods. But for something like insurance, even if I pay for it in advance, I haven't really received the benefit of the insurance until I've had the insurance coverage. And so that can be confusing. So in an accrual basis of accounting, so we have to work with adjustments. And so this little framework for adjustments is something I put together a video for that I think is pretty helpful, but it's kind of a long video. So if you go to the additional study resources, it's like a 20 some odd minute video of me explaining each of these areas. So just real quickly, we have 4 types of adjustments. 2 of them are called deferrals, and 2 of them are called accruals. Okay. To defer means to put something off till later. So when we say we have a deferred expense, this is a situation where we spend money on something, but it's not going to be an expense until later. A good example of that would be something like supplies. When we purchase supplies, rather than just saying supplies expense when we purchase them, instead we record them as an asset called supplies. Then as we use them up or get the benefit of those supplies, at that point we record the expense. And so at the end of a month, we would have to look at how much supplies we've actually used up during the month and then record the expense for those. And so that's a deferral of expense. A deferral of revenue would be if somebody were to pay us cash right now, but we haven't earned any of it. And so we would record that as our cash going up, but we wouldn't record the revenue because we haven't earned it. Instead, we'd create a liability called an unearned revenue. Then at the end of the month, we'd have to look how much of that revenue we'd actually earned. And at that point, we would do an adjustment to record that revenue. I know I'm getting like into sort of very non-concrete territory. So give me one more second and then I'll get to these examples that are in the problem, and I think it will help. An accrued expense. This is an expense that's happening over time, but we haven't recorded it. So we're not going to, so for example, we get to the end of the month, our employees have worked, but we won't actually pay them until the next payday. But at the end of the month, when we're completing our financial statements, we have to record, well, how much expense we actually incurred. So we'll figure out how much our employees earned during the month that we haven't paid them for, and we'll do an adjusting entry to record that expense, and then we'll pay them on the next payday. And then finally, an accrued revenue is the same way. A lot of times we do work for people, especially people like who do time-based work, like lawyers and accountants. We'll do work for people, and when we get to the end of the month, we have to tally up how much we've worked and record that as a revenue because we've earned it. and then bill the customer. They won't pay us for it until next month, as you know, when they get their bill. So that's the idea for adjusting entries. The whole reason we're doing an adjusting entry is to recognize our expenses or our revenues at the end of the financial accounting period, even if we haven't necessarily received the money yet. And so that, again, that can be a little confusing. So let's look at the problem, and then I'll try to talk you through these. So here's this Wells Technical Institute. They provide training, and people pay tuition directly to the school. So at the end of December, we know that we're going to have some adjusting entries, and then it gives us all of this additional information. And it gives us an unadjusted trial balance. So it tells us to prepare their income statement for the year. Then it tells us to prepare their statement of owner's equity, and then finally their balance sheet. Interesting. That's not where I thought they were going with this.
Yeah, I had a question on more of like, I think the problem is before this,
Okay,
the
let's
like
say,
adjusting entries one. Like I could figure
yeah.
out the income statement and stuff, but like
Okay,
the
well, I was
adjusting
like, that's not where I thought they were leading on that. So it's number 3 here.
the one before this, I think.
So here they want us to actually do the journal entries, right?
Yeah, this is the
Okay.
one.
Yeah, good. All right, which is where I thought they were going with the lead in. All right, so the first one, it says, an analysis of WTI's insurance policy shows that $2,807 of coverage has expired. So that's just confusing language. But what that means by expired means that they have used that insurance. And so we could look on our unadjusted trial balance and see that we have prepaid insurance as an asset here. That means the company had paid $15,632 in advance for insurance. And then at the end of the financial period here, we say, okay, well, 2,807 of that has now been used. Okay, that's what they mean by expired. So we're going to do a journal entry to show that prepaid insurance has been used up. Okay, and so what we're going to do is we're going to recognize that as an insurance expense, and we're going to reduce the amount of prepaid insurance. So again, what had occurred is they had paid in advance for insurance, and now at the end of the financial reporting period, the end of December, they're recognizing they've used up $2,807 of that prepaid insurance. So our journal entry will decrease prepaid insurance by $2,807 and increase insurance expense. Okay, does that make sense, or did that not really help?
No, that made sense. I was just confused when I first read it if I was supposed to like subtract it from it or just put it in as it is. But that makes sense. Thank you.
Well, and what's hard about this is some of them, it really does depend closely on the wording. And so, and that's hard. And then you try to, consider a person for whom English is not their first language, and they're having to like read these super closely. And I feel for them, because like I speak Chinese, but it's rough Chinese, and to try to actually do like word problems in it would be terrible. So let's look at B. Inventory count shows that teaching supplies cost $2,004. So this one, we have teaching supplies that cost $2,433 available at the year end. So here, if I come down and look at the balance in my teaching supplies account, it says it's $10,420. But at the end of the year, I'm counting them up, and I have $2,433 worth. So the question is, how much did I use, right? And so for this one, I'll have to subtract. I'll have to say, well, if I have an unadjusted trial balance of 10,420, and now I'm only counting 2,433, I must have used $7,987 worth of supplies during the year. So the journal entry I'll have to enter is, oops, there's the problem with having my thing here. that I'm going to recognize as a supplies expense. Sorry, teaching supplies expense, the amount I used up, and I'll reduce the asset by that amount. All right, the third one, our annual depreciation on our equipment is $11,227. So in this case, it's telling us the amount of depreciation, which recognizes the amount of the asset. Let's see. I guess they have an asset called professional library and one called equipment that they've used up during the year. Oh, so this is for the equipment. So they've used up 11,227. So we're going to do a depreciation expense on the equipment and then record accumulated depreciation on the equipment. And so if any of you have a question as I'm going here, just interrupt me because there's no other easy way and I won't get offended. I don't want to, or if Brianne, if I answered your question and you're like, there's no need to go through all of these, that will also, I'm also fine with that. But I'm sure, I just figure for a lot of people, there'd be some value in working through each of these and just explaining a little bit about why. All right, annual depreciation on the professional library. So we're going to put depreciation expense. And accumulated depreciation. And then the amount. So all four of the, so these first four transactions are all what we call deferred expense adjustments, okay? Because in each of these cases, we had an asset, in this case, prepaid insurance, that as we used it up, we went ahead and recorded it as an expense. Okay, the same thing here, we had supplies, an asset, as we used them up, we recorded them as an expense. And then with depreciation, the same thing, we have an asset, equipment, and we record it as a depreciation expense on the equipment. So these are our deferred expense entries. All right, so let's see. On September 1st, WTI agreed to do 5 courses for a client for $2,400 each. 2 courses will start immediately and finish before the end of the year. 3 courses will not begin until next year. The client paid $12,000 cash in advance for all 5 courses on September 1st. And when they did that, WTI credited a liability account called unearned training fees. So what they're not trying to get us to the entry for the initial payment by the client, that was already recorded back on September 1st. They're asking us to do an adjusting entry to recognize the portion of this money, this $12,000 that we've actually earned. And so if it's $2,400 per course and we've completed 2 of them by the end of the year, we would do 2,400 times 2. So at the end of the year, we have earned $4,800 of that revenue. And so what we're going to do is an adjusting entry to reduce the unearned training fees account by $4,800. Remember, because it's a liability, we'll decrease it with a debit. And then because we've now earned that money, we're going to record that as training fees earned. So this adjustment is called a deferred revenue adjustment because we received revenue in advance, or we received cash in advance, but we didn't actually earn it until in the future. And then at that point, we'll record the amount we've earned. On October 5th, WTI agrees to teach a 4-month class for an executive with a payment due at the end of the class at December 31st of $7,798, or that's the amount we'll have earned. So in this case, we are providing the service to them, but they haven't paid us yet. And so we have to do an adjusting entry at December 31st to recognize that we've earned that money, even though we haven't been paid. So we're going to record an increase to an asset called accounts payable because they haven't paid us. But then we're also going to record training fees earned. So this says, all right, oops. As of the end of the year, we have earned $7,798 in training fees from this client, but they haven't paid us, so our cash didn't go up. Instead, we're recording that as accounts payable.
Wait, sorry to interrupt. I thought accounts payable was for like when
Oh,
we owe other people.
You're right.
money.
I did that. I was talking, and so I messed up. It's accounts
I'm so
receivable.
glad I wasn't the only one that was about to say that.
Actually, I was testing you, and you came through with flying colors. So good work. No, that was just a mistake on my part. So thank you. The fact that you caught my error, though, makes me happy. I'll be honest. But I didn't do it on purpose. I just screwed up. Let's see. 2 employees are paid weekly as of the end of the year. 2 days salaries have accrued at a rate of $100 per day for each employee. So we have 2 days salary at $100 a day for 2 employees. So 2 times 100 times 2 should be $400. And so this is one of those situations where you recognize we've incurred this expense even though we haven't paid it yet. So we're going to do salaries, and it'll be something like salaries expense. And then because we haven't paid it yet, it'll be salaries payable. And then the amount. And then finally, the balance of the prepaid rent account represents rent for December. So I'd have to go up here and say, well, what is my prepaid rent account? Oh, they're paying some heavy duty. Oh, that's insurance. I was like, that's some heavy duty rent. $2,085. So what they're saying is, again, the wording is a little confusing, but what they're saying is that amount represents the amount that we'll have to record for December. So we're going to do rent expense. The 2085, yeah. And our prepaid rent asset is going down by 2085. All right, so I don't know, was that helpful? Did it
Yes, that made a lot more
clarify
sense.
how these work? Okay. Yeah, the trickiest part about all of these is how for some of them, it's like, oh, they're just giving you the number. And so you just use that number. And for other ones, it's like, no, you need to subtract it. And so like learning why is what really helped me when I was learning this. Like in the case of this second one, where it said, I had to read this carefully and say the inventory account shows that supplies costing 2,433 are available at year end. And so always the expense is really the amount that we're using up of the asset. Okay, so since I knew what I had at the beginning of the year and I know what I have available at the end of the year, I have to subtract to find the difference, which is how much I used. Whereas like on the first one, it tells me the amount that I've used. It uses this word expired, which I think is confusing. And then on these depreciation ones, the same thing. It gives me the amount, because they could reword the question and say something like, you know, the asset had this much of a useful life and make you calculate depreciation expense. And so that's the trickiest part about these, is sometimes they will present them in more than one way. Anyway, so other questions I can address, or, you know, do you just want to complain about McGraw-Hill because nobody likes it? And
I'm
also,
always willing to complain about McGraw-Hill.
yeah, just so you know, I use a product in the past called My Accounting Lab by Pearson. It had things I liked better than McGraw-Hill and things I liked less. And then I used one now called Cengage Now for another class I teach, and same thing. So it's like, if I could take the best features of all of them, maybe we could have a pretty solid learning management system, but really this is what we got. anyway, and also like if everybody's good pretty much and was just checking in, we don't have to, it doesn't have to last an hour. So it's okay if we're done. I just don't want to leave people with unanswered questions or concerns.
That was pretty much my only question. But my McGraw-Hill is super weird. I don't know if anybody else it does this to them, but like I'll have to refresh it like twice before I can actually get on, and then it will randomly be like, oh, it just timed out, even though I've only been on it a couple minutes. So I have to keep re-going back into the assignments. So like I don't know if that's normal or if that's just mine.
I don't know. I haven't had similar problems. Anybody else have?
Not that I've noticed, so it might just be yours.
Lucky you. Can you tell me how you're accessing it? Are you accessing it?
I access it through the like when I'm on the courses and the
Do you click
I
this
click
right
on
here?
and then I'll click the connect library, but sometimes it's not even loaded right there and I have to refresh it a couple times before I can actually get on it.
And what browser are you using? Are you using Chrome?
Yeah.
Okay, because really, the Canvas is really optimized for Chrome for some reason. I don't know why, but a lot of people have problems when they're using other browsers. So I don't know why that's happening to you, because that's not a complaint I hear a lot of times. Occasionally, I find out like a student's trying to do this whole thing on a phone, and that would be horrible. But yeah, and I don't know if it's if I were in your shoes, I would try it from another computer and see if you have the same problem, to see if it's something on your browser or something, or if it's something with, I don't know, your interface between your Canvas and McGraw-Hill, because that might help get us closer to a solution.
Okay, I will try that. Thank you.
Yeah, it's frustrating enough, and then to have to fight the computer constantly. All right, anything else? Okay, well, so I mentioned last week, and just in case, you guys probably already saw it, but in case there's somebody who's going to watch this video later who didn't hear about it, you won't see teacher resources, but you'll see student resources in yours. In the student resources, I have this link called Brother Fox's Additional Study Resources that some people find helpful. It's honestly just a Google Doc with a bunch of links in it. And so all of these little videos that are like 6 minutes, 2 minutes, these are videos I put together, which are honestly like just kind of like little lecture pieces, but I try to keep them short. And so, except for, like I said, the one on adjusting entries is 24 minutes. So that's a little bit brutal, but it does walk through a bunch of examples. And so I just want you to know that's there for you. Someone today asked me if there was any good places to practice their debits and credits. So I found like this accounting coach website has a debit and credit practice quiz that was pretty good. So I just threw a link in there to that. So I just want everybody to know that that's there, for anybody who wants it. And then these links to Brother Stanton's lessons. These are just, he's another teacher at Ensign College who teaches this course, and he was like, yeah, if you want to throw mine in there, you can. So I just put him there for, these are more like class meetings he's had with other students that are just there for you. So I just want you to know that there's additional material for you if you need it. And if we're good, then we can call it a night. 30 minutes is way better than an hour. And, I mean, I'm no mathematician, but that's what I think. Any last questions or comments before we end up? And I do want you guys to know, sorry, no, I saw you go off mute, but
Yeah.
this is not mandatory. Okay, this is totally like if it's valuable to you. If it's not, like if nobody comes to this, then it's just like an office hour where I'm here. I'm totally cool with that. So always know that you don't feel obligated. Go ahead, Noah.
Yeah, no, really quickly, I was going to say, I seem to be struggling to find a resource, not a resource, but like a way to contact you. I didn't know if there was like a specific email or like a way in Canvas to do that.
That's a good question. So it's possible, this is a new class to me. and I usually teach for BYU Idaho. So even like this pathway, their thing is set up different. And it's possible that my info
Yeah, I went to
didn't,
like your account and I didn't see an email listed there, like for Canvas or Pathway, I think.
so it is in the syllabus. There's
Okay.
one thing, but I thought I had to put in my profile. And what I thought I updated the profile. So maybe I'll try to put that in somewhere more clearer, so that people can find me. Yeah, that doesn't have any contact. Okay, so yeah, it is in the syllabus, but I'll add something.
If you're taking recommendations, I would probably say just put it in the study resources page because that looks pretty good.
Yeah, okay, yeah. So yeah, sorry that was so hard to find. And I mean, it is in the syllabus, but it's
Mhm.
not anywhere else that's like, shoot, I might just throw it on the main page, like, hey, if you need something, here's how you get a hold of me. Yeah, I apologize for that. Like I said, tossed into this last minute and thought I'd taken care of the little housekeeping items and maybe missed a thing. Oh, I was gonna make one more. I guess I'd call this an announcement. I'll probably put it in a written announcement. So these for this course, they have all these Excel practice things, right? And they're actually pretty cool and pretty valuable, I think, for people who've never used Excel, and not too hard for people who have. But they're, just so you know, they're onerous to grade. There's 50 of you, and so each one of those I have to go through individually and then make comments on. And so I just wanted to like throw out there that if you turn it in early and I make comments on it and then you want to resubmit, totally, I'll do that. But if you turn it in like the day it's due, and then you want to change it based on my commentary, I think the answer is probably going to be no. I just want to throw that out there because by that point, I've got the new set of them come in. I've got another 50 of them to grade. So I just wanted to sort of make that as an announcement that's for the Excel practice assignments. Once they're due, I'm not accepting any additional changes. So I know that sounds horrible. I feel like a bully for saying it, but it's just overwhelming, the volume of those. So on that happy note, yeah, are we ready to finish up, or are we any other questions? All right. Now, Brianne said the opening prayer, and since there's only 3 of you, would one of the other 2 of you be willing to offer a closing prayer for our meeting?
I suppose I might as well. It'll be my first time in a Zoom class saying the prayer.
Yeah, praying in Zoom, it's just a little weird. Yeah.
Yeah. All right. Dear Heavenly Father, we thank thee for this day and we thank thee for all the many blessings you've given us. And we would ask that you help guide us and help teach us as we learn these new courses, and you give us confidence and strength. And I'd ask that you watch over everyone and their families in these trying times, and that you give us strength. And I say these things in the name of Jesus Christ. Amen.
Amen. Hey, thanks very much. And well, have a great night.
Yeah, you too.
Thank you.
Thanks. Bye-bye.